Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my friend Peter Boockvar. Peter is the Chief Investment Officer with the Bleakley Advisory Group. Welcome back, sir.
Thanks, Evan, for having me back.
Yeah, it's such a huge pleasure having you back down to Wall Street Silver. It's been a little minute since you were last on. Well, last time we were on, gold where it wasn't where it's at, silver wasn't where it's at. I wanted to pick your brain to talk about everything that's happening, precious metals, like the U.S. dollar and everything like that. But let's start off with gold and silver. Gold, that's the huge excitement in the precious metals market right now. Where do you see gold going now? I guess until the end of 2024, next 2, 3 months.
Well, after the big move that it's had, over the next few months, I wouldn't be surprised if maybe we had a little bit of a rest. Uh, it's a tough call when it comes to sort of trying to time the rest when you're a bull and you're in a bull market, which I think we're clearly in. Regardless of whether we have a pullback or a rest, I still think we're going to see higher prices. What's amazing is, as we tape this, gold's at a fresh record high at around 2,700,
Yeah.
and you put on the financial news, and there's still not many people talking about it, which tells me that there's more discussion about Bitcoin than there is about gold.
Why
Uh,
is that?
so I find that interesting, and I also find that very bullish for gold, as not many people are talking about it. Now, those that are most interested in gold remain those foreign central banks, which seem to be hell bent on further diversifying their assets into gold and away from other things like the dollar in terms of their reserve basket.
Right. And a lot of people are noticing now too, like since the Federal Reserve, they cut the point 0.5 basis points, and they're seeing that movement in gold. Do you think that would be the ultimate catalyst as the Fed continues to reduce the interest rates? You're going to start to see a weakening US dollar and stronger gold prices. What are your thoughts there, Peter?
Well, in the short term, I'm uncertain because other central banks are also cutting. The ECB just cut for the third time, and the euro has softened recently. The UK just got a more benign inflation number, so the Bank of England may cut. We got a surprise cut from the Bank of Thailand, and also got one from the Bank of Korea, even though I don't think they're going to cut again for a while. Reserve Bank of New Zealand cut. So other central banks are cutting too,
Right.
which would at least in the short term create a bid for the dollar, especially since we've gotten some comments from some Fed members that maybe they only cut one more time over the next two meetings rather than 25 at each of them. So in the short term, it's tough to call the dollar here, but I understand why it's bounced. I just question the sustainability of that bounce as we go into next year.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Now, what's concerning you most about the economy right now, or what do you have your eyes on right now that's concerning you, Peter?
Well, I see the economy as with a lot of cross currents. Most people they paint the economy with one brush, and the Atlanta Fed just raised their Q3 GDP forecast to 3.4%, which is rather robust. So people say, oh, the economy is great.
Right.
And I argue, well, certain pockets are doing fine, but other pockets are not. To me, what is holding the US economy on its shoulders right now is all this government spending and the beneficiaries of that spend, whether it's you're a healthcare provider via Medicare, Medicaid, you are a recipient of 4.5% to 5% interest rates
Right.
in terms of your interest income, or you're building a chip factory in Arizona, or you're building a battery plant in Kansas, things are doing great. If you're a higher income consumer that owns a lot of stocks, well, you're feeling good and you're traveling and you're going out to restaurants. And also, if you are touching all this spend on AI, well, business is great. If you're in the picks and shovels business of that industry, where you have the hyperscalers that are spending 15-ish billion dollars per quarter, if you're on the other side of that spend, well, you're doing great. But on the
Right.
other hand, lower to middle income consumers are clearly more price conscious, value seeking how they spend. They're focused more on needs and less so wants. Manufacturing's in a recession. If you're a real estate agent, well, there's not much inventory to sell, and business is not so good for you. And anything related to sort of housing turnover is under pressure. We saw in the U.S. retail sales number for September that furniture sales continue to be soft. So I see a lot of pluses, but I also see minuses. And yes, we're aggregating to this 3% plus GDP number, at least in the estimate so far for Q3. But in the first half, we've averaged about 2. And
Right.
from what I see in the economy, that's sort of distorted by all the government spending, it feels much more like a 1.5% economy, notwithstanding the headline figures.
Do you believe, and you absolutely nailed it there, Peter. Do you believe like a lot of people online are saying like, oh, we've been in a recession since 2022, 2023. Are you in that same kind of consensus that we are currently in a recession, or what's your take on that? Or no, it's not a declared one,
Well, not broadly, because I think the government spending is when
is covering it up.
we're talking almost $2 trillion, 6% of GDP is sort of masking the weakness. But
Right.
like I said, manufacturing's been in a recession for 2 years. If you're a lower income consumer, you've been in a recession, suffocating from this very high level of inflation. Existing home sales in the US are tracking at the lowest levels in 30 years.
Wow.
So there are pockets of recession, there are pockets of growth. But again, the enormous amount of government spending that's goosing certain areas, and I forgot to mention infrastructure. So if you're touching that in terms of state and local government spending and from the federal level as well, things are fine too. So as the famous investor Jim Rogers always said, you give me a printing press and I'll show you a good time. And the U.S. government seems to be doing that for parts of the U.S. economy.
So what happens when they cut that spending and they can't cover it up in that 6%? What happens then?
Well, yeah, there'll definitely be a contraction, but at least for the coming years, for the next couple of years, that spend is still going to work its way through. So, but to your question though, what happens when those EV battery plants are done?
Right.
They've been built. Now, just as they're building them, the demand for EVs is faltering. So you could have some mothballed factories soon after they're completed. But at least on the chip side, there'll still be a bunch of years left where more chip factories are getting built. But again, 6% GDP, I'm sorry, budget deficit as a percent of GDP, which is about $1.8 trillion right now. And, God forbid we go into a recession where the unemployment rate continues to go higher, where tax
Right.
receipts falter, then you're going to be high single digits and you can even touch 10%. So now that's going to be a mitigating factor to an economic downturn, but it can also help exaggerate one.
Yeah, absolutely. How critical is it right now, I guess, to protect your wealth, Peter? Like looking at everything that's happening in the economy, what would you tell, I guess, an investor right now looking at the economy or just looking to protect their wealth?
Well, as I talked about, the economy seems very mixed, and it's not just in the US, but it's international. You look
Yeah,
at Europe, Germany is seeing no growth and probably a mild recession, but the UK is doing better. France is under pressure, but Spain's actually doing okay.
right,
China's growth rate has slowed, but India is seeing robust growth. So there are cross currents overseas as well. Now, in terms of protecting one's wealth, I mean, that's what I do for a living, and I think about that question every single day is, yeah, the markets are roaring, but is it sustainable in light of, the factors we talked about?
right,
Is earnings growth going to be strong enough to sustain a 21 to 22 times PE multiple on next year's earnings, let alone a much higher one for this year's earnings?
right.
And, I'm a value person at heart. So when I see those kind of multiples, I always find that I'm watching my back. So um, it's a tricky market because people don't want to miss these gains, but at the same time, there's an enormous amount of risk out there when you trade at these valuations. It doesn't give you much of a margin of safety. And if the unemployment rate continues to go up in the US, I don't think the Fed is going to have the same ability to just slash and burn interest rates
Right.
to address that, because I still think the inflation story has not gone away. I expect a lot of inflation volatility in the coming years, and not this magical growth path to 1 to 2% that just happens to stay there.
Yeah. No, you absolutely nailed it, Peter. And it's for sure scary times we're living in, but like what you said, yeah, it's absolutely crazy. Now, where, Peter, can people connect with you? Like your social media? I'm going to add it in all the descriptions below, but where can people connect with you?
So I write a daily newsletter on Substack. They can just go to Substack and type in my name and see it, and they can test it out and subscribe if they are interested. On Twitter, it's at Boockvar, Boockvar. And then if they're interested in wealth management services, they can go to our website at bleakley.com to learn more about us.
Awesome. I'll put everything in the description below for everyone. Everyone, thank you for watching. Please hit the like on the button for the video. And again, Peter, it's such a huge pleasure having you come down to Wall Street Silver. Your wealth of knowledge is greatly appreciated, and I'd love to have you back on in the future.
Sounds good. Thanks, Ivan, for having me.
Awesome. Talk to you soon.